Good afternoon. I joined the oil business in 1992. And actually, I was living in Hong Kong. I'm originally from Namibia and then Cape Town, South Africa. And in 1987, I thought I'd better see a bit of the world. And I bought a round-the-world ticket from Cape Town, intending to end up in London. And I landed in Hong Kong, and I stayed here for 5 years. And I was an IT guy. I worked for IBM and a couple of other companies. And in 1992, I was introduced to the owner of an oil company in the United States. And I flew over to Kentucky, and he offered me a job. And so I decided, well, I'll try the oil business. I did not know how to put gas in my car. That's how little I knew about the oil business. In South Africa, you never had to. I didn't drive in Hong Kong. And when I landed in the United States, I had to watch someone to see, how do you put gas in your car? So it's been a learning curve since then. Within a year of being in the United States, the company I joined went into a Chapter 11 bankruptcy. I saw oil below $10 a barrel. I saw natural gas below $1 an MCF. So with that, I'll tell you about who we are, Upstream Exploration, and see which. Why are we here? That was a question asked by one of the audience earlier. We're here to look for capital. We're looking to do a refinancing. We're a company that's 3 years old. We started business on February the 1st of 2016. Assets were acquired out of a Chapter 11 bankruptcy using a credit bid, using the debt of the senior lien holder at the time. And we started with oil at $29 a barrel with about $1 million of cash in the bank. And HPS Partners, which is an investment management fund out of New York, who had the senior debt, agreed to use their debt to do a credit bid to buy the assets. And we set up a new company as a management team in New Orleans, Louisiana. Our current production is 7,400 BOE per day, of which 41% is oil. 2019 expected EBITDAX is just over $56 million. And our Q1 EBITDAX of this year was $12.8 million. So we're generating a lot of cash that we can use to invest in further drilling. Our proved reserves, just over 8 million BOE. And our PDP PV10 reserves are $76 million. That is a Netherlands Sewell report as of 3/1/19. So Netherlands Sewell has done our reserves since we started, and they do a full reserve report. It's not an audit. Our total 1P reserves are $126 million. So the investment highlights, why Upstream? We've grown our reserves and our production quite considerably. When we started with $1 million in the bank, we didn't have enough capital to drill or do significant workovers. So we built up our cash, and once we had the cash availability, then we could start drilling. So we've done everything out of cash flow. No new capital has been invested in the company. We're a low-cost operator. Our LOE, actually right now, this is a little bit out of date, is around $4 a BOE. And our G&A is similar, around $4 a BOE. So we have margins. Our cost is less than $10 a barrel. So we have good operating margins. Our average per barrel finding and development cost is under $10. So $18, $20 on a full cycle per BOE. We have no debt. As I mentioned, HPS Partners is 100% equity owner. We have no debt, and one of the intriguing things about our position in compared to our peers is we only have $13 million of P&A liability, which is $7.6 million on a discounted basis, well at end of life. So that's extremely low compared to our peers, who, if any of you are familiar with the Gulf of Mexico, it's a big issue. We have a great inventory of prospects. We're an ongoing exploration company. We're driven by seismic. We reprocess it. We spend a lot of capital in improving and reiteration of seismic. So we're driven by that. We have about 100 terabytes of storage data in our office in New Orleans. And we're a highly seasoned management team. We've operated in this area for years. We understand what the potential pitfalls and the risks are, and we're able to manage those risks. Just to sort of show you where we are in Southeast Louisiana, the asset footprint on the top right, the yellow and red areas are where we are primarily operating. The yellow area is what we call Breton Sound, and the red area is what we call East Cox Bay. And this is all within state waters. We do not have any assets in the federal Gulf of Mexico at this point in time. Operating in Louisiana, getting leases is very easy. It takes about 2 months. You nominate an area, and then you go and bid on the lease that you want. We're paying somewhere around $300 per acre, which if you've seen some of the numbers on land in the Permian, it's a tiny fraction. So, and we don't have much competition. We're a conventional player. We're not a fracker. We're not a resource play. And I'll show you some of our results in a minute. You can see our historical daily production. We've got a nice uptrend there to around 7,500 BOE per day at the moment. This is just a breakdown of our reserves, the Netherlands Sewell report, which is 76 million of PDP and 44 of PDNP and about 6 million of PUD. This slide shows our full cycle economics. So the block on the right shows the capex that we've expended to date, which is about $44 million. And that's capex that we've, from internally generated cash flow. Our return on invested capital on a full cycle basis is 111%. So if you look at the total capex we've spent and the success that we've had, and this includes one well which was a dry hole and one well which was marginal, but the successful wells and the value created has generated a 111% return, which I think is pretty competitive in any basin. So this is from February the 1st of 2016 through April of 2019. The chart on the bottom left shows our production, our daily production, which you can see initially dropped off through a natural decline. And once we were able to generate enough internal cash flow and build up our capital, we could drill and execute. I'm going to jump this one. And just to show you, this is our PDNP inventory, which we will execute. Some of that is underway. And we have significant exploration upside. And these are all prospects that have been leased and by and large permitted, are ready to drill. You can see the capex on the bottom chart, the dark blue, and the net gas and oil production in barrels per day. So again, we're looking for a new equity debt owner because HPS need to recover their funds to return to their investors. But we're just looking for that transaction. We're not looking for additional capital to help us draw. We can draw from within our own cash flow. We do have some opportunities for acquisitions strategically that make sense to us. So we would look for additional capital for that. And this is just quickly our net production per day in the top left-hand corner, showing it projected by our 1P plus our exploration. The exploration is on a risked basis. Our recurring LOE and G&A on the top right, which you can see has dropped considerably. And that obviously is a function of higher volumes in production. Our offshore, a lot of the costs are fixed, so the variable cost doesn't go up considerably the total cost doesn't go up considerably with increased production. And the EBITDAX, the bottom left hand, again, that's on 1P plus exploration, plus risk exploration. And our free cash flow in the bottom right hand, which you can see is an attractive proposition. Is that my time? Okay. Thank you very much.